Check 1, 2. Oh my goodness gracious. Time to get going. Alright, let's do it. Pew pew. Hey, folks. Welcome back to Surely Sound Studio. My name is Martin. You can call me Marty. This is my show, so let's go. Let's go. Turn the music down a little bit. Let's get into it. What are we talking about today? Well, let's zoom out and have a quick look at the Bitcoin chart. Because my goodness, it has been bloody since we were talking about taking profits up here. At one point, we were down almost 36%. We bounced back, and we're still about 32% down from the all-time high. My, oh my. Can you believe it, folks? Can you believe it? I mean, I believe it. Pretty much makes sense to me. And that is simply because of Le Chatelier's principle, which is, in chemistry, refers to nature favoring balance. Basically, if we go too far one way, there's going to be force that wants to bring it back to neutral. And it works with elements, it works with psychology, human beings, society, economics, markets, mostly, right? Is what we're talking about. And so, if you've been paying attention at all, for the last little while, past a decade or so, everything's really changed. Okay, like really changed. We have technology, obviously, just everything is way different than we were 20 years ago. And I don't think it's gonna slow down anytime soon, but there's gonna be some bumps along the road. And one thing I think that's happening, of course, is everybody, like, they keep pumping money into these markets, as you can see. Like, let's just zoom out a little bit on Bitcoin. I'm the king here. And you can see just money being pumped, aggressively being pumped into these markets, right? And then comes out. So for a little bit of hopium on the short term, with such an aggressive drop, will most likely come a little bit of relief. If we zoom in, this is the 3-day time period. So each one of these candles is 3 days in time. This goes all the way back to April 2024. And as you can see here, we've just cracked into the red. Which is actually this RSI is signaling a buy signal. which not financial advice, but it might be all right. I'm not going to take it. I don't think. I'm not taking any swing positions on this. Not quite yet. There is a large gap down here that would make sense to fill. So yes, like I said, we could see a little bit of a relief rally, maybe back up to 96. That would make a lot of sense. And in a potential case, even back over 100K up to around 103. We've got a lot of volume in this area, so it will be a bit of a magnet for price. But as you can see, we have more volume in this area and it'd be much more of a volume for price. The only reason it would go up here would be to liquidate shorts. And so that'd be the exchanges taking out these positions so that they don't have to pay them on the way down. So this is 24 hours. There's been some new shorts opening this morning. This is weekend, so this is all kind of small. You know, it's only 24 million, 25 million, 25 million. That's nothing at all. 20 million. We're not talking about much money at all. And if you think that's a lot of money, then you should pay attention to financial system, because that's nothing. When we're talking about hundreds of millions and billions and potentially even tens of billions, then you're talking about whales, big money. That's the kind of money that you want to understand what and why they are doing what they are doing, if you want to benefit from it. Chasing people that spend $24 million at a time, I mean, it's crazy. The wealth inequality these days is terrible. One of the main leading problems or issues to all the problems. And if the wealth was distributed more properly and more evenly, we would see much better place for a lot of people to live in. But unfortunately, with the situation that we live in and with the system that we all abide by, it comes down to education. If you know how the system works, you can use it to your benefit and you can be wealthy. If you don't understand how it works, then you probably save cash and you think that saving money is what you should be doing, when the truth is it's not. There's a saying that goes, you got to spend money to make money. And a lot of people misinterpret that and think that you got to it's true in every sense of the way, but the most people think you got to spend money to make money. It's not 100% the way most people see it. The way it should be approached is that you need to spend money to make money by investing that money into assets that will no doubt over time gain value because of inflation. Inflation is not transitory. Inflation is constant. It always has been and always will be, as long as the money that they print is backed by nothing. So that's the case. The money that they print, the money that you work for, you spend your time for, you sacrifice your life for, is being printed by other people for nothing. So in turn, everything will become more expensive because there's no baseline that we can peg true value to. So everyone's screwed. And then the banks tell you to save money, and especially save money with them, and then you get even more screwed because that does you no good at all, because they don't pay you anywhere near as much as inflation does. For instance, like an RRSP, like biggest scam you could ever invest in, unfortunately, because they're telling you to save your money now, and then you get a little bit of a tax write-off now, but then you have to pay that back later. So guess what? Follow the trend. Money's being worth less over time, and taxes are increasing over time. So why would you want to save your money in a bank and then get taxed on it more later, and then also have it be worth less later? Right? That's a lose-lose situation. Investing money with the bank is a lose-lose situation for you as the investor. I mean, on a general scale, if you're watching this, then that's probably the case. I mean, if you're multi-billionaire, then you want to have the bank do stuff for you, whatever. But for the most part, you really got to do your own research, because you can't trust these people that are literally just relying on you to retire them. Okay, they're going to say anything they need to say to try and make it sound appealing to you, but all you're doing is just making sure that they have a job and that you're retiring them with your money, which you don't need to do. Technology, the internet, knowledge is free. Doing your own research is free. You can find absolutely anything you need to on the internet. Many different websites that are very educational and very true and proper. Don't stick to the social media sites where you get things from a massive amount of different people who have a massive amount of different opinions over a massive amount of things that aren't even real. Stick to narrowing down your focus and find what is actually provable, verifiable. Don't trust, verify. And then you'll do a lot better for yourself. But all in all, we know that nature seeks balance. Nature favors balance. And so every action has an equal and opposite reaction, unless you're talking about the financial system because of inflation. So this is a action, reaction, action, reaction, action, reaction, action, reaction, action, reaction, tough to acting to acting. Okay, you got it? You see how it works? This is the S&P 500, which is a broad index fund of the US stock market, going all the way back to November 2017. Okay, this is 2020. You can see what happened, but look at how much money is flowing into it. Well, a little bit of money flows out, but then money flows in. Oh, it doesn't even touch the red before money flows back out again, or back in again, right? The trend is your friend. So the funny thing is that a lot of people, especially people that have been in the stock market for a long time, like if they have somebody come up to them and ask them about the stock market, oh, no, you don't want no part of this shit, man. Stay out of this. You don't want no part of this, man. It's funny because like, they're just saying that to protect themselves, right? There's a lot of people out there that say they want to help you, but they're just benefiting themselves. Anytime you want to take part in something or somebody that is saying that they're going to help you, just start writing stuff down. Take control of keeping track of what's happening and make sure that it's actually working out for you beneficially. Over, give it some time, of course, if that's what you are interested in, but make sure it's working out for you. Don't just keep doing it and keep doing it and keep chasing the carrot for nothing. And that's what a lot of people are doing these days. They keep chasing the carrot for nothing over and over and over again. Elect this guy, it's going to change. Nope. Elect this guy, it's going to change. Nope. Change this policy, it's going to change. Nope. Nothing ever changes in the political world because the world is run by the financial world. The financial world owns the political world, and you get mad at the political world because they're not doing what they said they were going to do and they're not making your life better, yet they can't do anything because the financial system is who owns them, and they're the ones that are actually pulling the strings. And you are just getting mad at the political system, even though there's and of course participating and listening to everything they have to say and taking it all in and saying, okay, if the more I learn about this, the better off I'll be able to make better decisions. But it's like you're literally just being entirely misled. So the more you get sucked into that, the worse off you're going to do. And I've seen it throughout my time on this planet. So many people who are in their 60s, in their 70s, in their 50s, the generation that grew up with the invention of TV and now spend a lot of their time watching TV. Because most of them are retired or whatever else, and they just got not much else to do, and they all watch like the news. They all talk about the news, and it's like, oh man, like you gotta realize who owns these shows that you're watching, right? Like everything on the TV is pretty well fake in one way or another. Okay, if not fake, it's elaborated and it's exaggerated. You have to understand that, again, that's their business. Their business is to keep your attention. So they're going to keep saying things that keep your attention. When things happen in the world and it continues to apparently get worse and worse and worse, it's because more and more people are paying attention to it. And these people are going to keep milking it as long as they can. As long as it's bringing attention in, they can sell that attention for ad revenue. They can make money. Okay? So you have to understand that things come to an end terrible things, when terrible things are happening in the news, those things come to an end when people stop caring and paying attention to it. When you stop investing your time into the tragedies, they stop happening, because the only reason they're happening is because somebody's making money off of it. Okay? Again, so it all boils down to the financial system. Everything runs off the financial system. Every string, every corner we take, everything, it all has to do with the financial system. Okay, so this was 2021 to 2022. We saw the bear market. This was 2020 to 2020. We saw a flash crash. This right here is when I woke up to how the world really works. This right here is when I capitalized on how the world really works. And this right here is when I capitalized again, and look where we're about to do right now. Does this look similar? Just looking at a graph, if you've never seen one before in your life, let's just make some similarities here. So this is our strength, our relative strength index. We're getting very high, but we're starting to roll over. And look at, you can see that it was actually starting to roll over before this actually started to roll over. This started to roll over here. Arguably, this started to roll over here. So you had August, and then you had all the way to December, almost, what's that, 5-6 months almost of upward price action while we were losing strength. So this is just liquidating those over leveraged shorts before moving down because they don't want to pay them, and also playing the game of psychology, making everybody think that it's going to continue to go higher and go higher and go higher, but they're just pushing the price up artificially to make people buy until we actually run out of buyers, and then it's over. Okay, so the whales play their games, then they let retail play, and then the whales play their games, and then they let retail play, and the whales play their games, and they let retail play, etc., etc. For every buyer, there has to be a seller, and vice versa. So for them to be able to sell high, they need to convince you to buy high, and for them to buy low, they need to convince you to sell low. Right? So always pay attention to the narrative that's happening in the news, which, for instance, right now, I think I was looking at this an hour ago. Bitcoin drawdown risks rise as long-term holders offload large portions, warns Peter Schiff. So if you don't know who Peter Schiff is, I mean, he honestly, his career was on an absolute tank mission until Bitcoin became a thing, because if he didn't have Bitcoin to shit on, he'd have nothing anymore. It's pretty funny. He's a gold bug. He's been a financial advisor, influencer, whatever, for a long time. And of course, he's had his ups and he's had his downs. But it's like, ultimately, he was almost completely out of the game because he was not doing so well until Bitcoin came in. And then he started shitting on Bitcoin. And now he's got a bunch of attention again because, of course, people get emotional about everything. And anytime somebody shits on their parade, they get mad and create more controversy, which in turn he gets paid for because you're reacting to his post, right? You have to remember, it's all engagement farming. Okay, but this is honestly good. Bitcoin holders sold more than 400,000 Bitcoin throughout October. October! What happened to October there, boys? She got a little bit rug pulled, didn't she? Yeah, so remember, the narrative moving into October was Uptober. Everybody's gonna, oh my goodness, we're all gonna go Q4, right? We knew that was the narrative in the news. Well, guess what happened? People that have been in the market for 10 plus years took advantage. I took advantage. I haven't even been in for 10 plus years, but I told you guys this is a time to take advantage. Okay? Bags are in the green heavily. You got to take some of that green and do something with it. Whether it's, I don't know. I mean, like, ultimately staying invested with inflation over time will be fine. But for me, I like to capitalize as much as I can because I am so plugged into this that it'd be stupid for me not to benefit from it, from everything. But so now, 2 hours ago, this comes out, right? So now they're starting to try and scare people, right? So they're trying to scare people when we're down here, right? They were pumping your tires up here. Now they're trying to scare you down here. The fuck? Come on, man, right? So honestly, we've seen a pretty nice, where's my other chart? Actually, let's go to this one. We've seen a pretty nice bounce here from what we were talking about last week was 84K, right? 84042, which is the high volume node. Also was a 786. I don't have drawings on here. Yeah, so 786, I had this green box. This is kind of potentially where we were looking for somewhat of a relief rally. And if we didn't hold actually this almost to the dollar, 886, Let's see if we pop the 886 on, if it's, I'm pretty sure it's right about there. 786. Let's go here. 1618. Let's just go 0.886. Where is that? Where'd it go? 786. I want to see the 886. Now turn it on. 886. Oh, I had to put a point in there. 0.886. Where's that? There we go. Wow, look at that, eh? Wow. See? So there you go. Right to the 886. Now that would be basically our last hope, because look at this volume gap in here, right? And you can see anytime we spend time in a range, it gets strong, and then we mature from the range, test the range as support, which was resistance, before moving up into a different range. And so this was a range here. We had this range for, this is about, this was a little bit less than a year. It was quite silent, like 9 months or something. February to October, right? So that was basically almost the whole year. Of course, summer's in here too, so you can't expect a lot to happen in summer. But we had that range, we matured from that range, and then we created this range up here, and which we've been in since we broke into it, let's say about November 24 to November 25. So another year of sideways price action. Okay, so range here till we mature, range here. Now we are just coming back down into these lows. So nothing really to get too worried about at this point, in my opinion. I would expect, honestly, like even just look back here. We tapped the red before moving higher. We tapped the red. Who knows what's going to happen here? Well, look at this. First of all, this is actually quite bullish because we've got a low here and then we've got a higher low, and we've got a low here and we've got a lower low, and we've got a low here and we've got a lower low. So that means that the strength has actually come down further and the price has not. So that means that it looks like we're getting close, and it looks like Bitcoin's actually pumping a little bit right now, but it looks like we're getting closer to the bottom of the move before we're actually taking out this previous bottom, which if you're looking at structure in a straight line, we've broken structure. We broke it right here. We gave this, we were talking about this. I posted this in my group, like, boys, we break this ascending channel here where this price targets are lower, a lot lower. And this is when we were saying people aren't going to like it from lower than 100K. And look at that. Like, here we are a month later, and we've come down almost another 25% here from that breakdown, right? So that was an obvious sign that the lower highs we're rolling over. And again, look, you can see when the relative strength index has actually started rolling over all the way over here. And we had about another 2 months before we actually rolled over with price, before it reflected on the price. The strength ran out before the price did, because the whales played and then the retail played. And when retail runs out of money, we take profits, right? And so, and we DCA when we're taking profits, 1, 2, 3, right? We don't always go all in at once. We don't go all out at once. We always leave some on the table because we never know when, like I will say, because there was some large buys around 89K, 88K. I saw some $900 million single purchases, multiple $900 million single purchases all at once. So we're talking about, as we get down into this area, we're seeing people buy $1 billion worth of Bitcoin at a time. Okay. We do know that Bitcoin has the uttermost value of any asset known to mankind because of its liquidity. As long as we remain in a digital age, we want to have a digital ledger, and we want that digital ledger to have liquidity almost instantly. A lot of people say that Bitcoin is too slow, but it's perfect. You don't want it to be too fast, because then when stuff like this happens, for instance, if you go look at altcoins right now, let's pick an altcoin who's a really fast altcoin. Let's see. What's a really fast altcoin? I guess we could probably go with the one that everybody thinks is going to take over, XRP. How'd XRP do? Oh, XRP is actually not doing too bad. I don't look at XRP too much because I don't believe in the technology. If you want to be controlled by a central bank digital currency, then XRP is your coin. If you want the digital version of the failing US dollar inflated to infinity, XRP is your coin. I know it has its instant transactions, and maybe it'll work as a currency, or they're gonna um, have it integrated into the system as a currency, but it's not for me, not what I'm looking for. I'm looking to better my life, not have my life be more under control. Let's see, how's ADA doing? Oh yeah, so there you go. ADA is also very fast. So when it's fast, it means it's just easier to get rid of, right? Easier to accumulate and easier to get rid of. Bitcoin is a little bit slower, so it's a little bit harder to accumulate and it's a little bit harder to get rid of. But that's a good thing, man, because think about how hard it is to get rid of digital, or how hard it is to get rid of gold. You have to first of all have physical gold, and you have to first store it somewhere, and then when you want to get rid of it, you have to take it to, I don't know, a pawn shop. Maybe it would be your quickest and easiest get rid of it, but you're not going to get market value for it. If you want to try and get market value for your gold, you have to find, like, it's going to take you days, if not weeks, to get money for that gold. So in a market that moves as fast as it did, if you see this big green candle and you're like, okay, sweet, I'm going to take some profits on my gold, you might not actually get to take profits until you're already down 5% or whatever, like, because it's just not liquid. Okay. It's not liquid. It's solid, solid gold. Bitcoin's liquid. You can get rid of it at an instant. If you need the money, if you need the liquidity, it's there. And that's a reason why we're seeing what we're seeing right now, is the whales that have let this market mature and hold a lot of Bitcoin, who wouldn't be able to sell it in years past because they just have too much and there's not enough liquidity in the system for them to take the profits that they want to take. They have to wait for it to mature to a point where they can take profits. So yes, there's no doubt that we are seeing Satoshi era whales take profits because finally the market is mature enough for them to do so. So stuff like this makes complete sense to me and is completely healthy for a market and for a asset that acts like Bitcoin to happen. Like, this is totally fine. I do think this is not the end of this. So we, like I said, may see a nice relief rally, which will be sweet. Maybe I'll be looking for longs earlier this week, but I'd probably be looking for shorts later this week. I do expect some volatility because that's a pretty big move down. There's going to be lots of buy the dippers. We are currently seeing the bounce from the 886 and we're holding back above the 786 and haven't closed a 3-day candle below, haven't closed a weekly candle below. The weekly candle closes in 4 hours and 31 minutes. And if we close above the 786, and that is technically bullish with what looks to be a hidden bullish divergence forming on the higher time frames. So this week could be volatile. Next week will probably be volatile as well. These bigger time frames, the moves and the signals that we see on these bigger time frames take more time to reflect on the price. So for instance, if you want to really see what's going to happen this week, we probably come down to the 4 hour and we see not necessarily a bottom structure, in my opinion. We do see some relief and we do see some money flowing back in. We could see a nice little pop up and we could regain that area of interest, comes back around to the 618 and the previous value area low. But if we can't get it back above that and hold that as support, then that'll be our signals to be looking for shorts. Of course, there's a lot of liquidity in this area from all these people shorting all their way down, and that reflects up to what's a 96K. You look at the liquidation heat map and we zoom out for 2 weeks and you'll probably see there's quite a bit of liquidity up there. So it would make complete sense for us to go and take out some of those highs and take out some of that liquidity. Okay, so here you go. Look at that, 97, 96K. There you go, like massive liquidity pool of hundreds of millions of dollars all up here, right? Not too much in between, but not really much underneath. Okay, there is more underneath if we go back a couple years, because there's always people that are going to round trip their bags. But ultimately, the market makers are losing control, losing more control every day. As long as more participants come into any market, then the whales will lose more and more control. So when the more saturated any market is, the less volatile, the less manipulable it will be. So the whole idea behind Bitcoin is that it's supposed to be decentralized, and if everybody bought Bitcoin, it would work a lot better. A lot of the things that you hear negative about Bitcoin are only happening because of the majority of people, or the minority of people, that own the majority amount of it, right? So if you own more of it, then you can move it around. That's why I don't like things like XRP, because there's like 3 or 4 guys that own 70% of it. And it's like, man, why would you want to subject yourself to anything like that, because in an instant, at any time, those guys could dump their bags and the whole thing would just collapse. So it's being that's like definition of being propped up. I mean, the stock market, American system stock market right now is being propped up by a circle of buying through all the top 7 companies who are buying from each other and buying from each other and buying from each other, and then all just the money's just circulating, right? Like they're reporting that their earnings are up, but the earnings are coming from people who they're subcontracting out to buy stuff from them. So it's like, I mean, as long as they keep printing money and keep pumping it in, and now it sounds like the Fed's going to stop quantitative tightening December 1st and start easing. It's pretty crazy. It's not very good if you're if you're like a professional economist, and you have been for a long time. You're watching the markets right now, just being like, what is happening? Like, this is completely unsustainable. Absolutely, completely unsustainable. But the dollar is backed by nothing. So as long as they keep printing it and keep pumping it into the markets, they can artificially prop this thing up forever. You have to understand that. And that's another reason why they're like, yeah, you don't want no part of this shit, right? Because it could collapse at any moment. But the thing is that if it collapses, we still, as a society, need a medium of exchange, right? So as long as the digital ledger still exists and the internet still exists, and we are still moving forward technologically as a human race, things like Bitcoin are going to be the things that save us from this artificial financial collapse, or this whole artificial propped up bubble of value, because there is no true value, because we're seeing less and less people work. We've seen more layoffs than ever, yet we are seeing the rich get richer simply because they hold assets and they keep printing money and pumping it into the markets. So they're it's a bubble. It's completely inflated by the money printing. But the thing is that they don't have to stop printing money. And the system now, before everyone was worried about a bubble because it would pop, but now there's no debt ceiling. They've basically, during 2020, while you were paying attention to other things, a legislator got changed all over the place as far as the financial system is concerned. There was caps on certain printing amounts. There was caps on certain distribution amounts. Everything was kind of controlled so that we didn't have massive blow off tops and massive bubbles. Okay, because it happened in 2000, it happened in 2008, and they're trying their hardest for 10 years after to try and stop something from like that happening again. But they realized that the more they try, the worse things are going to get. So we need a big event that we can justify doing what we want to do after we've accumulated all the assets that we want to accumulate. We need to justify to the public a reason for what we're going to do. And we're going to do that. And we're going to manipulate the markets and position ourselves properly before we do that. And then we're going to make sure that we distract them and make sure that they don't participate because we want it all for ourselves. And then by the time we want them to participate and we've already done everything that we need to do, then we'll pull away the problems and we'll start to let them know what's happening. We'll get people back to work again. We'll let them start buying in, and then we'll dump the markets on them so that we have, because they need somebody to sell to, right? So this crash that we saw happen over the last week has already got people screaming for the hills. Which I find rather interesting. I lost my music. Where'd my music go? It's tripping me out. It was gone for a while, wasn't it? Well, okay, it's interesting because I'm quite surprised that, because honestly, like, really only Bitcoin has gone down too much. The SPX is only gone down not much at all. We're really zoomed out here, so it looks small, but is it need for panic? Where are we, like right here? Like, it's only down 5%, which is, I mean, traditionally stock market dumping 5% was not good back in the day. But ever since they've been taking off the gold standard and the money printing is like, we're seeing this was just earlier this year, right? Yeah. Earlier this year, we saw a 20% correction in the stock market. Like, that was chop licking. That was like, yes. Like, and so it's not like, it's not out of the question that something like that happens again. Maybe we come back down here, right? Like, that's resistance, drop, flip, support. It's called a support resistance flip. Support resistance flip. Support resistance flip. Support resistance flip. Support resistance flip, right? So sure, opportunity is down here. Why isn't my music? This is tripping me out. What are you doing? What is going on here? It's still playing. Bop, 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 bop. It's still playing. Just can't hear it. There it is. All right. What was I saying? Oh yeah. Anyways, I've been talking to people, or I've been talking. I mean, I don't talk to people. I try not to talk to people. No. I've been posting for I don't know, a couple months now, or maybe maybe a month. We're talking about taking profits before, but now I've been here's the Dow Jones. You know, it's everything does the same thing, right? Everything does the same thing, and ultimately it's all. So this actually we can talk about that in a bit, but that's the UST dominance. Ultimately, what was I going to say? Oh, Bitcoin's taking the high. Doesn't look too bad, actually. I was going to long that earlier. Le Chetelier principle.
B is going to be in a gaseous form. And this is going to produce C, which is a gas, and D, which is a liquid.
We don't need to get into the
In this video, we're going to focus on
chemistry.
Le Chatelier's principle. Now, you might be wondering, what is Le Chatelier's principle? What's the basic idea behind it? Well, whenever you impose a change on a system at equilibrium, the system is going to move in such a way as to undo that change or relieve some of that stress that you impose upon the system.
Relieve some of that stress that you've imposed upon the system, right? So that's kind of what we're talking about today. Relieve that stress. So it works in both ways, right? So if you want to, this could be considered stress relief, stress relief, stress relief, stress relief, stress relief. If we're talking about this being a bubble, this is stressing the bubble, relieving the bubble, stressing the bubble, releasing the bubble, stressing the bubble. And as you can see over time, no matter how large the release, the relief, whatever, no matter how life-ending, world-ending they talk about it being, within months, it's back to where it was. And within years, it's double. Months, it's back to where it was, and years, it's like, you know what I mean? Okay. So because of inflation, these are viewed as opportunities. You make your money here. You don't make your money here. You make your money here. You make your money here. You make your money here. DCA, 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 and then you can do whatever you want. You could DCA out this whole time if you wanted until we see something like this, because look at how similar everything is, right? When we go down quick. And I was talking to somebody the other day, and they weren't sure about the market. And I said, this is the bear market. And honestly, this is the best time to be in the markets, because if you're longing, which means you're putting your money in, you want the price to go up. Look how long you have to wait to get these payouts, right? Like it doesn't look like a long time, but this is, I mean, you could long here, April 25, and then maybe you're taking profits on that position in October. So you're talking like 6 months here. Short position, when you start to see signs of weakness, take a short position, and then February, April, March, April. So in 3 months, in half the time, you get almost the same return if you're shorting, right? And then you're shorting and you're taking profits quickly on our shorts, because we know that they don't last forever. This was a long bear market back here, because the reason we had this bear market was because of Bitcoin. This is the traditional stock market, but the reason this took so long was simply because of Bitcoin. You look at Bitcoin and we go back to that time, we saw, let's just to be sure here, this was 2021, December 2021 was the top, and October 2022 was the bottom. December 2021, let's find that. December 2021 is right here. Okay, so Bitcoin had already topped, leading indicator, had already topped That's why we call Bitcoin the king, you guys. Remember, because it's more liquid, it's easier to move, so it's going to react first. So you want to be watching Bitcoin so that you know what's going to be happening in the markets. And so we see this with Bitcoin already, but we only see this with the Dow Jones, right? We only see this with the S&P 500, okay? Get it? Get it? There's a reason why we watch Bitcoin. There's a reason why Bitcoin's king. Okay, so we were saying the top was in November 2021, the bottom was in November 2022, right? So this is the exact same time right here that we saw the bear market. This right here was the reason why we saw that bear market, because look how much money came in. Look at this. This is insane. Okay. And remember, this was 2020, right? So this is, I'm trying to tell you, like they figured out that Bitcoin was going to change everything in like 2018, 2017, 2018, there was a bull market. 2017 and 2018, 2019 was kind of, well, 2018 was a bear market, but people continued to build and people really started to understand what happened. And then 2020, we need to do something about this before it gets out of hand. Okay. So they did something about it, made everybody freak out in March 2020. And what happened after that, while you were all distracted? Bitcoin went up 1,700% in 1 year. 1,700, almost 1,800% in that's 2 years. It's 2 years there. 2 years. Because there's a 3-day candles, 396 3-day candles. So maybe that's almost 3 years. Bull markets usually last 3 years, 3 to 4 years, and bear markets last a year. So like, this was not my money. This was not your money. This was governments, countries, institutions, all these people who were saying that Bitcoin's a Ponzi, you don't want any part of that shit, right? Like we were talking about before. You don't want no part of that shit. You don't want no part, right? It's a logical next step for you, and you probably do want some part, okay? I mean, you do you, not financial advice. Something I do or say should be taken as financial advice. I'm just a guy on YouTube in a Surely Sound studio hat talking about things that I notice on the internet. So always do your own research. Always do your own research. But I mean, just look and see here. Just look and see, okay? So they did this. They did their hardest to quantitative tightening, interest rates, everything they could to try and squeeze as much out. FTX collapse. Banks were collapsing. Like they let it fall apart down here. It was like as far as markets go and the way things had worked in the past, anytime you would see a drawdown such as this, that's when the Fed would step in and stop QT and start QE and start invert interest rates, pivot, blah, 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 start to help things along again, right? But they didn't do that. It was quite prolonged and quite harsh. So we went up 1,700%. How far did we go down? Up 1,700 in like 3-4 years, and then in 1 year down 75%. So if you bought the top, you were hurting, right? And if you bought the top, it was because you were influenced by the people who bought the bottom and told you to sell and told you to panic and told you to buy toilet paper. Make sure you got a clean ass. You don't want to be rich though. Poor people got clean ass. Oh God. You know what's funny is I think the rich people don't even use toilet paper. They use those freaking, what are those called? The tushies. Rich people are so cheap they don't even use toilet paper. Okay? Come on, man. They had you buying toilet paper down here. All right. It's enough of that. But, you know, if you had bought down here when everybody else was scared, anywhere around here, even if you bought like right here, this top, you know, you were still up 40% that much, that longer, right? So that's why you see DCA in the bear markets. And then when it comes back, she comes back strong. And so now we've had this other pull up, and this one here has actually got me feeling pretty good. Traditionally, I would think, based off of past performance, that we would see bearish price action for the next year. We would see relief rallies, but each rally would be lower than the last, and we continue to make lower lows and lower highs until we hit a bottom. Now, I wouldn't be surprised if we made another high. Now you're like, what, Marty? You just said it's the bear market. What's going on here? Well, you see, we've had actually, so we had a 1700% there, right? So there was there, that's the force, and nature favors balance. So we have so much force up, you need to balance that out. This, however, from this bottom to this top is only 700%. So 1,000% less. If you bought Bitcoin down here after FTX collapsed, and actually, if you're watching Your Future Hand was started right here because we were telling people this is the top, you guys. Everybody was calling for 100K. We're like, no, this is not gonna, 100K is not gonna happen. Look at the statistics, look at the labor markets, look at the actual numbers. Numbers don't lie, people do. And so we were trying to help people and guide people through this. And what have I not been doing for the past few years? We stopped, Your Future Hand stopped after, I don't know, somewhere around here maybe, we took a break. And then this whole year, I didn't do much posting or talking about it. Most of this year, I didn't do much. It's only really in the last few months that I've been saying to people, hey, if you've been buying and DCAing the last 3 years, now is when you start to pay attention, unstake your coins, get ready to sell into the pumps, because this is what we have been planning for years. Okay, so now that's kind of happened. Potentially we could see another relief, or we could see more, but I mean, if we see more upside, then we're going to see more downside, right? Because if we see more force this way, we're going to see more force that way to level out the equilibrium, right? So, but the fact that we've only seen a 700% gain this time, and look, the same time period. Well, no, sorry, not same time period. That's 900. We're on the 3-day. It's been longer. So it's been longer, it's drawn out, and it's been less. So therefore, we've had less force. That would lead me to believe that we'd see less force back to the equilibrium, right? So if we come down to 50K, there's a high volume node here at about 60 to 55K. That'd be down 50% from the all-time high. That's last time we saw 75, and we saw less than half of the up than we saw this time. So less than half of the up, I mean, wouldn't even be that. It would be more like up here. I mean, it would just make sense to come down here. If we do come down here, then we're getting accepted back into this range, which we've been in 1, 2, 3 times. Now, if we come back into this range, I would really hope to expect, we see that held as support. If we take this low out down here at 48 to 50K, then we're looking at massive dumps, massive, like very quick liquidations, very large orders will get triggered down here, and we'll see like just the price will go nuts. It'll be changing hands and the only reason something like that would happen is if we see something in the news that is end of the world worthy. Okay, so I don't think that's going to happen anytime soon. I think I think right now with this little bit of a pullback is nice. Now if we can hold here, and then we do print the hidden bullish divergence on these higher time frames, we were just tapping into the red here. We're just tapping into the red. There's a chance that we could see continuation, right? And we know over the long term that we're going to see continuation one way or another. It's just going to be hard because it's going to make you try and sell. Like they want you to sell low, right? So they're going to, because eventually they're pushing the price down into their orders. Like we know that they have orders on the books, right? So, and they have large orders on the books. So we know at some point they've already started buying. We've seen big buys already, but they DCA because that's the strategy that works. They do the same thing that you can do. You can do the same thing that they can do. They just do it with a lot more money. They do $1 billion at a time, whereas you can just do it with $100 at a time, but the percentage will be the same. Okay? It's all in a game of percentages. No matter what you do, whether it's business, finance, trading, anything that you do, you should always look at it in a value of percentages, because the percentages will stay constant. X equals this plus Y equals my percent, right? Your X and your Y value can change. Due to inflation, prices will go up, but your percentages can remain the same to give you an equilibrium that you can understand what is fair value of, you know, whatever you're doing. Fair price for your business, fair, you know, what you're getting for the product that you release. You know, everything is, it's got to be fair, because if it's not good enough, then no one's going to buy it. And if it's too good, then no one can afford it, right? So nature favors balance. I keep forgetting. I got it typed over there, but Le Chatelier's principle. He's a chemist. And I mean, like, if you guys have been watching this at all, you know that I like all that stuff. Math, chemistry, science, like doing labs and stuff like that. Procedure, observation, like discussion. Man, all that stuff, I love it. You got to get into that stuff. You gotta get into that. You gotta get away from the fart jokes, and you gotta get into the science of things. And have your vegetables. Have your vegetables and salt. That's always good for you. And occasionally fast, because that's also very good for you. Okay, so for instance, we want to zoom in. I mean, basically what I'm getting at is long term, we haven't seen an aggressive push up. So I don't think we'll see quite an aggressive push down. It's still, this is just market maturing. This is what's happening. The market's maturing, but I don't think this dump is over, and we do see some relief. I do think we'll probably make a lower low. We like to come back to this purple line. We like to come back to the moving averages, the 200 smooth moving average. If we already hit the 200 moving average on the daily. Yeah, because basically an easy strategy is anytime you're below or make contact with the purple line, which is the 200 smooth moving average on the daily, then you can start to DCA. So on a bull market, you don't get it very often, but when you do get it, it translates quite well. In a bear market, that's your opportunity. And what I've been telling people is that opportunity is on the rise. Opportunity is on the horizon. We can see it coming. Okay? This stuff is not rocket science. And if you just start to pay attention to it, you can figure it out too. Okay? Nobody wants to be a slave. Nobody wants to spend their life slaving away to work. Like the whole, like the mentality of people not retiring anymore is insane to me. Like, really? If we were taught this stuff in school, by the time you're in grade 12, like they could start, I teach this to my kids, and they're under the age of 11. And my two girls understand this more than most people. And for their birthdays and stuff like that, I've stopped giving them cash, and I give them liquidity, market liquidity. Here's your market liquidity. What are you going to do with it? Okay. And they have their own accounts and all that sort of stuff. And they are going to never have to work for somebody ever, because I'm teaching this to them so young that by the time they're graduated, they'll probably have more money than I do already, because they're kids. They soak things up like a sponge, and it's amazing how much they can learn and how fast they can learn it. This kind of stuff, I didn't really click for me until I was like 30 years old. Oh, sorry. It didn't, not even 30. I only like really started figuring it out when I was 30, like started to dive in deeper when I was 30. It wasn't until I was about 32, 33. So after several years of diving in every day, and also documenting on YouTube has really helped me too, because a lot of the times I'll go back and make videos and make shorts of these. So I'm watching my own stuff, watching my own content, learning from myself, learning from my observations that I see, because I'll just sit here and look at the charts and then just verbally let it out. And it actually, in turn, I usually find that when I overthink things, that's when I tend to make mistakes. If I just look at it and basically just interpret what I see, that I'm more often than not, I'm right. It's when that I overanalyze things that I find a reason to go the wrong way. And it's like, why did I do that? Like my initial gut instincts, that's what they say, like trust your gut. When you understand what you're looking at or what you're doing, trust your gut instinct and just go with it. And so, you know, this is honestly almost exactly what I see happening in the near future here, and almost exactly what we saw before. So here's the big dump with a buyback, and then some sideways price action, and then eventually getting back to that low and then losing the low. And now we're probably right about here. So let's just have a look here. Just kind of take an image of that, mental image, big drop. So we had the top, big drop, a bit of consolidation, come back to the wick, lose it, and then come back and make another low. Okay. This time we had the top, the big wick, the little consolidation, logarithmic scale here. So I have to zoom in because the numbers are getting bigger. So it's making it look smaller, but it's not. Top, big dump, a little bit of sideways, finally lose that wick, a little bit more sideways, take the low out, and then make another low. This one, if anything, is actually a little bit more aggressive. It's not smaller. So would make a lot of sense. Also, look at coming into the purple 200 moving average to come back up. You guys, look, I've got my alert set right here, guys. I've got my alerts. That's another thing that I've learned after staring at the charts. So I definitely stared at the charts a lot for years. Just trying to figure it out, just trying to dissect it and analyze it, just stared at the charts for a long time. Now I get it. I don't stare at the charts anymore. I know where I want price to go and how I'm going to react when I see how price reacts when we get there. So I use alerts now. So I don't just stare at the charts all day. I have an alert set. This is where I'm going to be looking for short positions. Somewhere in here, looking for a retest of this support resistance flip, SR flip. Because we are in a downtrend, right? Downtrend just means the overall trend is down, but we don't just go down in a straight line. We go down, up, down, up, down, up, most likely down again. Going down again. But as you saw in the last one, we could range here. We could range here for 2-3 months, and this could be our range. This could be our micro range. Let's see how this plays out. Let's toss it on the chart, because we've got our low here. We've got our high here. And we've got our new low, which could potentially be our new range. So we'll put this on here to February. See if we get stuck in this box till February. That would be something. This is where I expected us to come back here and fill these gaps. We've come down and we're leaving a CME gap. In 4 hours, this candle is going to close and we're going to leave a CME gap down here. So there's a good chance that at some point this week we'll come back and fill that gap, and then it's going to be pretty choppy. There's no one direction. If there is, then it's shorts. We're watching pumps and we're watching for weakness. And once we see the exchanges flip, because a lot of the time these price swings come up of big whales, which are the exchanges. Once we see them, their orders shift, then we'll shift. Potentially right now, though, might see a little bit of a long, maybe come back down and retest the 786 as support and hold it. Then maybe a long back up to here. Then maybe a short, long, short, long, short, long. We might be able to play this range for a couple months. Would not surprise me at all. What would surprise me is another quick dump down. If we come back down here and we don't see a nice flash wick back up, then we might be on the brink of collapse. It's all going to zero. Wait, so that might be some major news event. And I mean, that's opportunity. If that happens, then that's opportunity. That's why I've been saying it's time to pay attention, because your best case, I guess your worst case scenario, if you're waiting for opportunity, is for us to just range right here. But it would make sense. And me as a trader, I'll take advantage of that. And range trading is about some of the best trading you can ever have. If you have months where it's like, okay, we're buying the lows, selling the highs, 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 buying the lows, selling the highs. What more do you need? Buy low, sell high. You hit it 4 times right there. That's awesome. You can have your risk to reward ratio never skewed because you play the range, right? 80% of the time, Bitcoin just goes sideways. Markets just go sideways. If you zoom out, it goes up and to the right. But for real, like, we're just inside this range, and maybe we're going to start making this little range here, right? There's a little bit of gaps to fill up here, but I bet you if we zoom out, yeah, so if we zoom out, there's more volume in here. Let it load. Yeah, there you go. Lots of volume. So there's a high volume node here, there's a high volume node here, and a lot of gap to be filled in between. A little bit of a gap up here as well. So, if we get on top of this range and we start holding up here, well, then maybe this will be our range. Maybe this will be our range. But that's how we're going to take it. We're going to watch for how the market reacts at these certain levels. So come up here. Do I not have my pencil on? Keep trying. Keep trying. Anyways, it doesn't really matter. Time to pay attention. All in all, liquidation levels would make sense to come up here, wouldn't it? And take all that liquidity. There's a lot more liquidity above us than there is below us. Doesn't mean that we can't come back down and basically trap more shorts, right? Because when it goes down, a lot of people are going to be shorting. And so that's just going to add more liquidity to the top for when they decide to go get it. But ultimately, if you've been watching this channel and you've been keeping up to date, you know that liquidity is a magnet for price, and one way or another, it finds its way there. So the market seeks balance. Nature favors balance. Nature favors balance. Some exchanges are buying, but I haven't seen anything crazy aggressive. So nature favors balance. One way or another, equilibrium will be restored, and the equilibrium will continue to rise because of inflation. Learn how to play the game. Don't let the game play you. Have a good day. Do what you do. I'll see you on the next one. Peace out, folks. Which one's my outro? I can't remember which button it is. All right, either way. Peace. Ah. I recommend putting your opinions aside and learning how to think logically